Let me start then with capital and revenue expenditure. Okay, this is also a very easy chapter. The objectives are here. We are going to learn about capital expenditure, revenue, the differences between capital and revenue, meaning of deferred revenue, what are risk capital receipts and revenue receipts, capital and revenue losses, and capital and revenue profits. I hope
Ma'am,
you
Zara has a connectivity problem. She messaged.
messaged. Okay.
Yes.
Okay. Ma'am, I'll be a little late. I'm having connectivity problem. Okay. Okay. Right. So let's start now. Okay. Can you all see the screen? Everyone?
Yes, ma'am.
Yes, ma'am.
Oh, wait. Right. So let's start. First is introduction to capital and revenue expenditure. Where have you heard these terms earlier? Capital, revenue, where have you heard them?
Accounting chapters.
Accounting chapters, excellent. Where were capital items generally shown? Do you remember? Where did we show them? In which account? Where did we show? Come on. Capital expenditures we record where?
Credit.
Capital expenditures we always show in the balance sheet.
Oh.
They are expenditure incurred to acquire an asset. See, any expenditure incurred to acquire an asset. Asset gives me what? Future benefits or benefits over long years. So such expenditures are always recorded in the balance sheet. However, expenses which are incurred, okay, not to increase the earning capacity, but only on day-to-day basis, the expenditures which we are incurring, they are not shown in the balance sheet. Where will they be shown? They will be always shown in the profit and loss account. So here we need to understand, very important, that where capital items are featuring and where revenue items are featuring. A clear distinction needs to be made between the capital and revenue items. And this is done to ascertain the correct net profits and the true financial position of the business. If any error is committed in differentiating between the capital items and the revenue items, then what will happen? We are not going to allocate them in the correct account. We will not be able to put them. So a profit and loss account will not show only the expenses. Can you determine the correct profit or loss? You cannot. So expenses, see, whenever we put all the expenses of revenue nature in the profit and loss account, we are going to calculate the total income and the expenses, and then we will differentiate them to get the correct net profit or net loss. Similarly, in the balance sheet, all assets need to be shown, and this acquisition of assets is done through which money? Through the capital. When we invest capital in the business, we are spending some money to buy the assets. This expenditure is nothing but the capital expenditure of the business. So all revenue items need to be shown in the profit and loss account and trading account, while all capital items need to be shown in the balance sheet. This is why we need to understand this chapter. The basic purpose is to differentiate between revenue items and capital items. Now, which are the different types? You have capital expenditure and revenue expenditure, capital receipt and revenue receipt, capital loss and revenue loss, capital profit and revenue profit. Just look at that tip which I have put. Expenses shown in balance sheet are called capital expenditures, whereas expenses shown in profit and loss account are known as revenue expenditures. So the introduction is clear, what I've given you of capital and revenue. Now I'm going to go in details one by one. Clear? Anything to ask till here? Anyone? Divyata?
No, ma'am.
Muskan? Avni? Clear?
Ma'am.
Yes. Zara? I hope you're following what I'm doing. Meet, Krishna? Clear? Till here? Okay, great.
Ma'am.
Yes, Muskan, tell me.
Ma'am, the second point.
Second point, if any error is committed in differentiating between capital and revenue items. Now see, whenever I acquire capital expenditure results in acquisition of an asset when you are buying something. So whenever you buy an asset, where will the asset feature? In the balance sheet. Suppose I put the asset in the profit and loss account. It will not give me a true picture of the profits and losses, because all profits and losses need to be put. Okay, why is the mutual chat taking place between y'all? This class is not for mutual chats, please. Right. So where was I? I said, if there is any error that is committed in differentiating between capital and revenue items, or, okay, then what will happen is I'm not going to get a true picture. Profit and loss account, what will come? Revenue expenses. Say I have incurred some repair expense. I have given salary to someone. I have spent money on wages. Okay, I have given rent. All revenue items, which are generally those items where expenditure is done within the year. This is not to increase the earning capacity of the firm. So these expenses will always be recorded in the profit and loss account. Now, I know it is something new. You're finding it a little difficult, but as I'll do one by one in details, you will see the concept will be totally clear. Okay. Now, what is capital expenditure? This is very important, children. In fact, 2-mark questions generally come in defining capital expenditure. So please understand it very nicely. I'll show you a video also on it so that the concept becomes totally clear. Capital expenditure means that expenditure, the benefit of which is not exhausted within the current year, but it is enjoyed over a long period of time. So I am spending money to buy an asset, right? I went and I bought an asset for my, say I bought a machinery. I implanted it. Will that machine only give me benefit of 1 year? Or
No,
will
ma'am.
more benefit of more than 1 year?
More than 1 year.
More than 1 year. So it becomes a capital expenditure. So expenditure incurred for which the benefit is not exhausted within the current year, but for many years, and it is enjoyed over a long period of time. Second feature, such expenditure is of non-recurring nature. What is the meaning of the term non-recurring?
Ma'am, which is not repeated again and again.
Excellent. So am I going to every day buy a machine? Today I bought one, again tomorrow one, a third day one. Obviously not. I'm not going to spend so many raw materials I'm going to buy on day-to-day basis. So that becomes revenue item. But a machinery is only being incurred. The expenditure is being done maybe once or twice in a long period of gap. So such expenditures are non-recurring. And they result, if you look at that line, in acquisition of permanent assets. Very important that what are we acquiring? Permanent assets. Property acquired with the help of capital expenditure will be utilized by the business for a long time. And with this property, with this asset, I'm going to earn revenue over a period of time. So all expenditures incurred to acquire a fixed asset, to increase a fixed asset, and which are used in the business for the purpose of earning revenue, they are called capital expenditures. What are the examples? Purchase of land and building, cost of addition, extension, and improvement in the existing fixed asset. Say I bought a fixed asset, but I'm going to add a new feature to it. Say in my machine, it was more human-based machine. I have put a part, added a part because of which it can be more modernized. Expenses incurred for putting an asset in a working condition. Asset was not working, but I put it in such a way that now it starts working. Improving the earning capacity of the business. Any intangible asset money you have put in, like price to increase the goodwill of the business. Expenses incurred in connection of buying of land or paying lawyer any registration fees. All these come under capital expenditure. So what is capital expenditure? Am I being clear to all of you?
Yes, ma'am.
Okay, so what are the important pointers I said? Number one, the expenditure is such that the benefit of it is not exhausted within the current year, but it is enjoyed over a long period of time. Okay. Number two, Such expenditure is of non-recurring nature. Okay, it cannot be repeated again and again. Third, it results in acquisition of permanent asset. Okay, and fourth, property acquired with the help of capital expenditure can be utilized by the business for a long period of time. All points clear? Anything
Yes,
to?
ma'am.
Okay, tell me one pointer which I said.
Ma'am,
Ma'am,
Okay,
ma'am, I have a doubt.
benefit of which a capital expenditure means the expenditure, the benefit of which is not exhausted within a year or the current year, and it can be used over a long period of time.
excellent. Muskan, second one.
Ma'am, I have a doubt.
I'll listen to the doubt. First, tell me the pointers which I have said.
Ma'am, it is the
Hi.
Ma'am, all the expenditure incurred to acquire or increase the value of fixed assets which are used in the business for purposes of earning.
For acquisition of asset. I'm looking at the key points. Please highlight and understand the key points.
Ma'am,
Expenditure of benefit not exhausted within the current year. Number two, result in acquisition of permanent asset. Okay. Number three, what is it saying? That with the result in acquisition, it is non-recurring in nature. Very important. Okay. Tell me the doubt. Yes, Muskan, I'm listening.
Ma'am, in the last point, ma'am, I'm not understanding the acquisition part.
Yes, same here, ma'am.
Okay. All expenditures incurred to acquire or increase the value of fixed asset. That means what? I am acquiring means I'm buying a fixed asset or I'm increasing in the value of fixed asset. Say I have a fixed asset of worth 10,000 rupees. My first machine costs 10,000 rupees. I added another machine of 10,000 rupees. Now the machinery value has gone up to 20,000. So
Yes,
that
ma'am.
total 20,000 will come under capital expenditure.
Okay.
Got it? Clear now?
Yes, ma'am.
Is it clear?
Yes, ma'am.
Now just see a video, it will become clearer to you. Okay. Krishna, Meet, I should see your videos on. I am not speaking to walls. Meet, enough time I have given you. Please look at the video carefully. Everyone should be looking at the video. I'm not going to explain capital expenditure again then.
Every business has cash inflows and cash outflows. Inflows come from sale of its goods or services or by taking a loan. Outflows are payments for various things like stationery, computers, equipment, or land. This income and expenditure can be revenue or capital in nature. Hence, it is very important to understand the nature of the transaction so that accounts can be classified and maintained correctly as per applicable rules.
Wait 1 minute.
Every business has cash inflows and cash outflows. Inflows come from sale of its goods or services or by taking a loan. Outflows are payments for various things like stationery, computers, equipment, or land. This income and expenditure can be revenue or capital in nature. Hence, it is very important to understand the nature of the transaction so that accounts can be classified and maintained correctly as per applicable rules. Expenditure can be classified according to their nature. Thus, we have capital expenditure, revenue expenditure, and deferred revenue expenditure.
All three I'll explain.
A business
Okay, I just
incurs
done the
capital
first one.
expenditure for the purpose of long-term advantages. Such expenditure translates to investments for the business and are generally shown on the asset side of the balance sheet. For example, investments like a car, a factory, a piece of land, a patent, etc., are capital expenditures of the business. These contribute to the revenue earning capacity of a business for more than one accounting period. However, it is not always that a capital expenditure generates profit. Sometimes there may be a loss or an asset, such as a barren piece of land, may not have been used. Such an expenditure also is treated as capital expenditure.
Tell me, after seeing the video, anything to ask here? Is the concept been clearer now? What is capital expenditure?
So, ma'am, in capital expenditure, if
Muskan, did you understand? Everyone, have you all understood?
Yes, ma'am.
Divitra?
yes, ma'am.
Yes or no? Muskan?
Yes, ma'am.
Not
Yes,
understood.
ma'am.
Okay. Krishna, clear?
Yes, ma'am.
Okay. Others? Meet is put a thumbs up. Zara, have you understood? Avni?
Yes,
Clear?
ma'am.
Okay, great. Tell me, what is your question? What you all wanted to ask me? Tell me.
Ma'am, if like in capital expenditure, if any asset we buy and
Hmm.
it gets destroyed or it has faults in it, so the cost of it reduces when you are like selling it off.
That is a different thing. That you're talking about sale of an asset. Here I am talking about what expenditure I'm incurring to buy an asset. What they showed you is that what are we doing? We are spending money to buy an asset with the purpose that it is going to give me future benefit. At times, of course, see, when you buy, you don't know that there will be a loss or the land will turn to be barren. That you don't know. So your
Yes.
purpose of putting that expenditure as capital is because number one, you feel the benefit is going to be for a very long time period. Number two, it is resulting in the acquisition of permanent asset. So asset value is going up. And number three, it is non-recurring because on day-to-day basis, large expenditures we cannot do. The day-to-day expenses will always come in revenue expenditure. Deferred I'll come to later. I don't want to confuse you now with deferred. First, I want the concept of capital and revenue to be totally clear. Then I'll go to deferred. Okay. So I think idea of what is capital expenditure is clear to all. You all can just mark the definition. The definition is given at the end of page number 55. Please mark it out. Capital expenditure means the expenditure, the benefit of which is not exhausted within the current year, but it is enjoyed over a long period of time. Such expenditure, you have to write this whole thing, is of non-recurring nature and results in acquisition of permanent asset. This should be the complete answer of what is capital expenditure. And in fact, you should give one example like property acquired or purchase of machinery. That's up to you how you want to give it. Clear?
Yes, ma'am.
Now let's go to the features of capital expenditure. Can you look at the screen, please? I have explained all the important features here. What are the types? Basically here features is nothing but what comes under the category of capital expenditure. Capital expenditure results in acquisition of permanent assets. These assets are intended to be used in the business for earning revenue over several years. As I said, I am going and I'm buying an asset. My business is dealing with garments. So I need a machine to process the cotton into the cotton needs to be spun into cloth. So I'm investing into a machinery. That machinery, the money I'm incurring, it is going to be giving me benefit for a long period of time. So it comes under capital expenditure. Capital expenditure may also include expenses incurred for making the asset ready for use. Sometimes the asset is not in a working condition. Like I'm using a car for transportation. My car is not working. So I'm going to spend money so that the car comes into a working condition. Or any extensions I'm going to add to the car. So such expenditure would also come under capital expenditure. Capital expenditure may include expenses incurred to acquire the rights to carry on a business. Like you should have the cost of licensing. Okay, when you start a company or incorporation or any brokerage to acquire an asset. Expenses incurred to acquire intangible assets, to build the goodwill of the company. Money I'm spending on advertising measure or on any measure that can build the goodwill of the company, that can increase the earning capacity of the business, comes under capital expenditure. Expenses incurred on issuing shares and debentures. Whenever I'm investing capital to buy the shares of the company or the debentures of the company, that also comes under capital expenditure. Expenses incurred to reduce the operating cost, like conversion of hand-driven machinery into power-driven machinery, which I just told you, that I have a manual machine. My machine is taking this manual machine, when the laborers are working, they're only producing 50 units a day. But I'm going to put a motor in it that it becomes automatic. So from 50 units, now I'm getting 200 units a day. So this is done nothing but to improve the asset of the company. So this becomes a capital expenditure. Developmental expenditures, like to have a plantation, like a tree rubber plantation. Okay, any developmental processes come under capital expenditure. And expenses of preliminary nature. Where did you learn and how many, let's see, remember? Preliminary expenses I have discussed with you in some type of asset. Who remembers? Last year we had done it. Preliminary expenses. Meet, I think it's high time you put on your video now. Yes. Anyone? Preliminary assets during incorporation of a company. When I'm going to start a company, the establishment expenses, especially when we are starting with fictitious assets, assets which do not exist actually, but to show them
Like
as assets.
goodwill.
Yes, to show them as asset, not only goodwill, even preliminary expenses. We show them as establishment expenditures and we put them in the balance sheet every year to show that how much money is being spent on the asset. Such expenses all come under capital expenditures. Tell me, anything to ask here? Till now, not clear? You want to ask me any questions or I'll go ahead? Please ask if anyone has anything to say. Divyata, any questions till now? Zara?
No, ma'am.
Clear, totally.
Yes, ma'am.
Ma'am, they are more of type than feature.
Yeah, I said they come under the category of capital expenditures. Muskan?
Ma'am,
See, if you all don't ask, I'll assume that everyone has understood. Avani, Krishna? Yes, Muskan. Tell me.
ma'am, I'm not understanding the fourth point in the book.
In the book, the fourth point. What is the fourth point? Expenditure incurred for extension of improvement in fixed asset. That's now I told you. Overhauling of second-hand machinery. Overhauling means what? I'm trying to put a second-hand machinery into use. It is a second-hand machine. It might not be in working condition. So I have put money. I have added some extensive parts to it so that it comes under working condition. So it becomes a capital expenditure. Got it?
Yes, ma'am.
Okay. Meet, anything to ask? Krishna? Okay, great. So I'm going to revenue. Is capital totally clear? Then I'm going to revenue. If you have no questions in capital. I'm waiting, class.
No,
Okay.
ma'am.
Great. Now revenue expenditure. This is important because I'm going to do one sum with you where I'm going to ask you difference between capital and revenue. So be prepared. If you're not understanding, ask me now. Revenue expenses means expenditure, the benefit of which is exhausted within the current year. For capital, what I told you, that I am
Over
spending
a long period of
money
time.
for a long period of time. Here it is such an expenditure that is going to be exhausted within the current year, within this year itself. Such expenditure is of recurring nature. Krishna, what is the meaning of recurring nature? Who can tell me? Recurring means what? Yes, Avani?
Ma'am, it can happen again and again.
Again and again. Excellent. Revenue means day to day. I'm buying raw materials for my firm. That's a revenue expenditure. Revenue expenditure, very important line, does not result in the acquisition of permanent assets. With revenue expense, I am not buying any permanent asset. Please make that part very clear. In capital expenditure, we are buying the permanent asset. Revenue expenditures are to meet the day-to-day requirements of the business. Its benefit is exhausted within one current year. It's not going to give me a benefit for a long period of time. They do not add to the earning capacity of the business. They only help in maintaining the existing earning capacity. So any day-to-day expenses like repair of the machine is working, suddenly it got spoiled. I spent some money to repair it. That comes under revenue expense. I
Ma'am,
went
they
to
were
buy
the
the
opposite.
just opposite. I want to buy my raw materials. I want to pay wages to the worker. I want to maintain the asset, my selling expenses. I'm paying rent. All these come under revenue expenses. So all expenses incurred on day-to-day administration of a firm and the effect of it is completely exhausted within the current accounting year come under revenue expenditures. So those expenses, please underline the definition properly. First part, please underline in your book, page number 56. Revenue expenditure means the expenditure, the benefit of which is exhausted within the current year. It is of recurring nature and it does not result in the acquisition of permanent assets. These
Ma'am,
expenses, yes, tell me who's asking.
until here is the definition till assets.
Till assets. And of course, with that, you must add that line that it does not add to the earning capacity and it is for day-to-day expenses. Clear?
Yes.
Anything to ask till here?
No,
Easy or
ma'am.
difficult?
It
Is
is
it
easy.
easy or very difficult?
Ma'am, it is
Ma'am,
easy.
easy to understand.
Easy to understand. Very good. Avani, I did not get any answer, and Zara also. Okay. One more video for revenue. You saw capital. Now you see one for revenue. Okay, be ready because once I finish showing, I'm going to ask a lot of questions. See the video.
Expenditure, which is incurred in the course of the business as a part of its operations or as part of its day-to-day activity, is revenue expenditure. It is deducted from revenue or income to a certain net income or net profit. Revenue expenditure is debited to the trading or profit and loss account. The benefit of such expenditure is usually instant and cannot be said to go more than one accounting period. Thus, we can say all expenses which are incurred to run the business are revenue expenses. For example, telephone charges, postage, repairs, purchase of material and goods, etc. Let's now look at an example. Say a company buys a typewriter which has an expected life of 3 years for rupees 3,000. The expected utilization for each year will be rupees 1,000. This table shows you the portion to be treated as revenue and capital expenditures.
Clear? Anything to ask till now? Easy?
Ma'am,
Yes. Tell
ma'am,
me.
I didn't understand the last part, the balance sheet and that thing.
You don't have to know. Don't worry. You don't have sums to put it in the balance sheet. Just understand that revenue item, the expenditure is such that it will be exhausted in one accounting year. Whatever expense I'm putting, that expense will be charged per year, one accounting year. On the other hand, capital expenditure, the benefit can be more than 1 year. So if I'm putting say 2,000, 5,000 or 10,000, I have bought say machinery for worth 10,000. The full 10,000 I'm going to charge as capital expenditure in the balance sheet. But in case, as if you saw the last example, they said they are spending 3,000 on the typewriters repair. So then that will shown as 1,000 rupees each year because it's a revenue item and its benefit there they were saying it's for 3 years. So it has been allocated as one year each because the first line of revenue expenditure only said that the benefit should be for one accounting year. Clear now? Okay.
Ma'am,
Yes, tell me. You have a question?
if I give you an example like there I bought a printer.
Hmm.
So that printer comes under capital expenditure.
Correct. Correct.
And if that printer got, like, it had some technical problems, so
And
I
went on
repaired
repair.
it. So it is revenue expenditure.
Excellent. Excellent. Got it. Okay. So till here, there's no difficulty. So we have finished with what is revenue expenditure. Then we saw a video. Now we come to the expenses. Do you want to see once more the revenue video? I think Muskan, I think you need to see it once more. You were having some difficulty. I'll just show it once more and then I'll go to the features. Okay. Just see it once in case you still are not understanding.
Expenditure, which is incurred in the course of the business as a part of its operations or as part of its day-to-day activity, is revenue expenditure. It is deducted from revenue or income to a certain net income or net profit. Revenue expenditure is debited to the trading or profit and loss account. The benefit of such expenditure is usually instant and cannot be said to go more than one accounting period. Thus, we can say all expenses which are incurred to run the business are revenue expenses. For example, telephone charges, postage, repairs, purchase of material and goods, etc. Let's now look at an example. Say a company buys a typewriter which has an expected life of 3 years for rupees 3,000. The expected utilization for each year will be rupees 1,000. This table shows you the portion to be treated as revenue and capital expenditures.
Okay, clear now? Now let's go to the expenses which are treated under revenue. Those expenses which are not giving me benefit beyond the current accounting year. Please understand, they are short-lived. So the expense which we are charging is only for 1 year. Like rent, salary, wage, power. They are not adding to the earning capacity of the business, right? So such expenses which are on day-to-day expenses come under revenue expenditures. Remember what all I told you? Number one, the benefit should be within one accounting year. Number two, it is of recurring nature. It can be repeated on day-to-day basis. It is very short-lived. And number three, it does not add to the profit earning capacity. 1 minute, Meet. I'm just listening to you. Okay. Yes, Meet. Tell me, what is your question?
Ma'am, I didn't understand the example. Can you please give some other example?
Sorry, which one? One more example you want of revenue expenditure? Okay, I'll just repeat. I'm saying that any expenditure which you're incurring on, say, repair. Okay, say I repaired something, say on repair of a machine, or I'm paying salary to any worker. I'm paying wages to the worker. Such expenses, or I'm purchasing raw materials on day-to-day basis. These examples will all come under revenue items because they are day-to-day expenses. They are not those expenses whose benefit you're getting for a very long period of time, like in capital expenditure. In capital expenditure, what I told you, that the benefit is exhausted more than one accounting year. That's what we learned under capital expenditure. And what did we learn? That it is non-recurring in nature, but revenue is recurring in nature. Okay. Even expenses incurred for the upkeep of fixed assets. Fixed assets always, whenever I'm acquiring a permanent asset, which expenditure it will be, capital or revenue, children?
Sorry,
Ma'am,
ma'am.
can you repeat?
When I'm buying any asset, when I'm acquiring a permanent asset, which expenditure it is?
Capital.
Capital. Excellent, right? So if to keep that asset in a working condition, I'm spending some repair on it, okay, or maintenance on it, then it comes under revenue expense. Same way, in expenses incurred to keep the purchase of stock of raw materials, they will also come under revenue items. These includes goods purchased for resale and also raw materials that can be purchased to convert them into finished goods. Depreciation. Now, whenever I buy an asset, Will the assets value be same all the time? I bought a car. Today I bought the car for 5 lakh rupees. Will that assets value always remain 5 lakh, or will it depreciate in value with
Will
years?
depreciate with time.
Will depreciate in value. So that amount of depreciation or the reducing amount, that will also be treated as an expense for me in a particular year. So that also comes as a revenue item. Clear? Loss from sale of fixed assets, a replacement of any worn out parts. Okay, that all also comes under what? Revenue expenditures. Interest on loss, interest on capital for expenditure period after the asset is put into use. Whenever I'm putting the asset into use, certain amount of it is being lost, a certain amount of it is being depreciated. All this comes under which expenditure? Revenue expenditure. Okay, so till here I am going to stop. I wanted to do one question with you, but we will do it later. Okay, just a little bit, one recap we'll do of the differences between capital and revenue, and then we will stop because the class is going to end. Okay, which one is used in acquisition of fixed asset, capital or revenue? Quickly.
Capital.
Capital, etc. Excellent. Which one increases the earning capacity of the business?
Capital.
Capital. Where is the benefit more than one accounting year?
Capital.
Capital. Okay. Which one is shown in trading and PL accounts, Zara? Revenue or capital?
Non-revenue.
Revenue. Which one is shown in balance sheet?
Capital.